Last time we talked, I think I mentioned that there were 20 or 21 states that had been affected by the coronavirus. And some people were talking about a second wave, but it's not really a second wave. It's really a first wave going in these states. And now what's happening is that we're seeing that it's not only 20 states, we're up to 31 states. All right, so we're seeing almost a 30% increase since the last time we talked about this, and it's generally affecting the country as a whole, where we're just seeing overcapacity in emergency rooms, and the economic markets are being affected as well. So we have to keep this all in mind when we're talking about the stock market, and we're talking about all these different big markets like Texas, California, and Florida. We have to remember that they are part of our infrastructure, as New York and Los Angeles might be, and Chicago, that they will affect us as well with everything that's going on, and the fact that it's only starting in these areas. So we may see another 3 to 5 weeks when they put their shelter in place or lockdown in place. So we have to keep that in mind. And the stock market's going to reflect this. It's already starting to price in to some of the stocks that we saw yesterday, but today is a different day, and some stocks are actually up, and the market's up a little bit. So we need to keep that in focus. I believe we are going to test some new lows, and I've said that before to a couple of people and my clients. But the thing to remember now is not only the retest of the lows, but to understand why this retesting in the market is happening, because of the pandemic as a whole, and it's going to reflect in the supply chains. Supply chains are reflected, then we're going to see prices start to spike up in some consumer goods. We are a consumer-driven economy, so we have to keep a focus on that. The other thing that you have to remember, if you have regional concerns, or companies that are in certain regions only and not nationwide, they're going to be affected more than others. They're going to be more sensitive to the price-driven economy that's occurring here. One thing we saw in New York immediately when this started was the gouging, was the certain stores running out of stock, or the supply chain being broken. We could most certainly see that in other parts of the country immediately. So we're going to keep an eye on that. And if you're an investor, you want to make sure that whatever you're in is properly geographically diversified now. In 25 years, in a very short time, I've been doing this 25 years, and in a very short time, I have seen markets just like this. And there's always opportunities for investors. We have to stay focused on where the opportunity is, so we have to be smart, we have to be strategic, and we have to basically look for items or stocks that fit our goals and objectives, but also that are not going to hurt us in the long run. So when I go look for a name, I'm looking for something that I can conceivably hold 3 to 5 years or longer. All right, but there are certain stocks that I look for that might be a year out, So depending on what you're focusing on, if you're a trader or an investor, there are all types of stocks and all types of opportunities for you to make money and keep making money in this market. The days where a product or a solution that bolstered one company like Apple going up, those days might be on the wayside. The reason why Apple and companies who are dominators in their sector is the fact that they keep coming up with these innovations on a regular basis, and that in turn keeps the profits going and keeps the company going up. As far as a stock that's concerned, like Apple, you have a very unique opportunity here if you're an investor. You own this stock not from the value or the bottom up or undervalue where it's at. However, we will buy it if the stock does go down, all right? But that you own it, it's like IBM of the world, it's a known brand name. They are the key innovators in their sector. They keep innovating, and therefore that's when the price of the stock starts to go up. And it's a good time to go in there if the stock has been brought down a little bit, for you to pick up some bargains. Banking is getting hit today. Luxury cruise area has been hit more than double digits. You don't want to go into there just yet. But if you are looking at like consumer staples like Campbell's soup, for argument's sake, these are things, home builders, like any new home builder companies. These companies have weathered the storms, whether it been the financial crisis, whether it been any other crisis du jour of the day. So, those are great companies to go in and say, well, they're down 12% or they're down 8%, and there's nothing fundamentally wrong there. So as a new investor, I would most certainly look at companies like that. Of course, the technology companies, because of a lot of technologies, I've been hearing for the last 20 years that technology companies, that's it, they're not going any higher, nothing's happening with them. So now we have to see that there is an opportunity there as well. And you say to yourself, well, it's at a 52-week high. How can I in good conscience go buy it? And then my answer to that is, well, do you think that company's going out of business anytime soon, or that their growth is slowing, So if the answer is no, then you have to look at companies like that to add to your portfolio. You also want to bring in dividend yield, all right? This is something we haven't talked about, but when you have a company like AT&T, a company like Philip Morris, BP Amoco, back in the days it was called, these companies pay decent dividends, anywhere between 3 and 10% dividends based on their price. They're reasonably priced, so there's a chance to go and buy something and add high quality to your portfolio without divesting that much money. So you could do really well by companies such as those, but they're not the only companies. And say you want to go buy income, preferred securities and bonds, there's opportunities there as well, because everybody forgets those. You can buy those with an ETF or an exchange traded fund, and you can buy those bonds individually if that's what you want to do, or you can buy a mutual fund or ETF equivalent. So there's the opportunity. You just have to not be shy and go for it.